Thanks so much for tuning into the trade setup. I'm Neeraj Shah, and well, a bit of a risk-off mood, but we'll get to that in a moment. First, the global news: Reserve officials played down a recession risk, even as a 75 basis points hike is on the table. But I must say, the views around the terminal rate have come off quite meaningfully. From I think as I read the note on Bloomberg from 4.61 to maybe 3 point something. So the expectations around future rate hikes are certainly coming off. Right or wrong, I don't know. But because of the worries of the economy, the Dow fell about 500 odd points. The bounce back rally essentially lost some steam. In geopolitics, Finland and Sweden are closer to joining NATO with the deal that they have done with Turkey, so to say. And in a bit of a first, right? You're seeing leaders of Japan, South Korea, Australia, and New Zealand all attending the NATO summit. Well, it's not just Russia which will be earthed with what's happening around NATO. Even China would be, and that's quite an interesting geopolitical development. Oil, of course, has held on to gains as report shows tightening U.S. crude stockpiles, Brent hovering around 118, if I'm not wrong. So that's essentially what's happened around the world per se. Now, what did the markets do? Well, tech led the sell-off, brutal pullback into Nasdaq, about 2.98% lower. It played out onto some of the others as well. And if you look at the other lead indicators of what happened, so Bitcoin down on the percent, dollar index still flattish, US 10-year yield just around 3.16. So no changes out there. In effect, what I'm trying to say is there's no material positive development happening on the other cues. The SGX Nifty indicating a start which could be around that very important support mark of 15,700. So it'll be crucial to see if we meaningfully stay below this, or do we kind of bounce back from there. Remember, expiry is just a day away. So that is something that everybody should keep at the back of their minds. Now, what happened in trade yesterday? Well, remember, as was the case day before too, yesterday we had a fairly positive market breadth. You would argue even Stevens, unlike what happened day before, but still not a bad one. A bunch of stocks on the. Remember, we spoke about upstream oil yesterday, and both ONGC and Oil India had a really good move. So that is one thing that everybody should keep in mind. Otherwise, a mixed set of names which went up, and Zomato continues to get clobbered. At some point of time, it will see maybe a bit of a bottom formation, but for now, Zomato continues to get clobbered. Has lost what, about 20% since the announcement of that Blinkit deal. So I was nervous when I said that. Oh, can Zomato correct about 10%? Who knows? It's actually corrected a lot more. So what's the trade setup therefore in light of all of this that's happened? I think Indian equities will reflect the global mood and will trade weak in the first half for sure. Can they bounce back in the second half? Remains to be seen. Let's see what Europe does, what's happened to oil and other noises from the NATO meet and otherwise. Keep in mind, amongst all of these negative news, China has really opened up the economy, and that might just ease the beliefs around supply chains now. So that is one thing. The immediate support for Nifty, as I said, around 15,700, and it will be very important to see what happens to that level today. Oil upstream may not do as well today. Remember, I mean, some bit of ONGC's buying was preemptive because of the rebalancing and the flows that come in to the CPSC index. But having said that, both ONGC, Oil India, Reliance did marginally well. They may not do as well today, but I still think that there is some merit in that side of the market by virtue of what crude oil has done to stay steady, even if some of the others have chinks in the armor. So that should remain in focus. And remember, for 2 days on a trot now, IT and metals, we've been talking about some short covering possibilities, and that has happened. But the global mood may not let it now extend itself in the current expiry. The belief for a lot of traders was that the expiry could happen at about 15,900. And because banking had already done the bit, IT and metals would continue to do the bit and would continue to move higher. But I just think that by virtue of what Nasdaq has done, by virtue of what's happening to global mood per se, that short covering bout may not really necessarily last too much. Now, in light of all of this, what are the things to watch out for from a trade perspective today? First, from not just necessarily from a trade perspective, but in terms of events, the GST Council meet outcome will happen. So that is part one. SEBI is going to hold its quarterly board meet, and I think a lot of conversation around how FPIs might be allowed in the derivative segment, and therefore that's a positive for, let's say, MCX. So that should be kept in mind. I don't know what kind of an impact does it have on the stock tomorrow, because a lot of people are anticipating this, but be that as it may, it's something to keep a keen eye out for. And AGMs are plenty to continue. So today, Asian Paints, HDFC AMC, Tata Communications, all of these would be in focus. So that is something to watch out for. The other piece, viewers, remember, the one simple way to think about all of this is that if indeed commodities have had a bit of a lull, and metals especially, and we're going to do a really good, we'll get to that in a bit piece, the conversation that we'll do today. But if metal prices are on a downtick, and if they continue to go lower, then anything which benefits out of that would probably continue to do higher. There are a lot of queries about what to do with autos per se. Now, one doesn't quite know what the impact of the weak rural sentiment around two-wheeler stocks might be, for example. But in general, autos have not had a really great run in the last 4 or 5 years. Can this build up that we're seeing in autos and thereby auto ancillaries continue? Well, one ray of light is, of course, that the commodity prices having cooled off, it augurs well for the margins. And if indeed, sales numbers do pick up, then you might actually have a space which has been an underperformer, and where valuations are not that expensive in select pockets, might do well too. So keep that at the back of your mind. What are the stocks to be watched out for in the session today? Well, I think the stocks of the day could well be BPHP, IOC, not on the positive side, I mean, because Singapore GRMs have fallen to about 23.5 per barrel from the recent highs of about 30 per barrel. And Brent crude has surged back to over 115, 118, I think the last time that I checked. So as a result of this, you might well have the downstream companies under a bit of a cloud, maybe in the session today. To my mind, at least, these could be stocks to monitor in the session today. Other stocks to watch, Root Mobile, they've approved a buyback of 120 crores up to 1700 per share. Sugar companies, Mint has reported that India is considering allowing some raw sugar exports. Now, does this happen? No idea. If it happens, does it benefit all of the companies? Again, not necessarily. But can the sentiment be marginally positive because in a space that has gotten punished a bit of late? Maybe so. So if they do well, maybe this could be one of the reasons. So that is something that you should watch out for as well. That aside, Page Industries and the promoter and director sellings continue, right? So Sundar Genomal is sold some more. I think Ramesh Genomal and Nari Genomal also sold some shares between June 23rd and June 27th. Piers, you would remember 2 or 3 days ago, I mentioned about this happening in one of the trade setups. I believe there is some addition selling that has happened here. So certainly, the promoters have sold a little bit. Now, this does not necessarily mean that the business is looking bad per se, because Page Industries in a recent interview mentioned about they are very confident of the growth runway being a 10-15 year runway. There could be personal reasons why these guys might have sold as well. So don't kind of mix between the two. But yeah, it's something that people should keep in mind. Usually these serve as short-term triggers. Some brokerage notes, CLSA has come out with a note on HDFC AMC. The stock is in focus for a number of reasons, including the fact that there are some bulk deals that happen, and the stock has really gotten clobbered. So CLSA maintains a buy with a target price of 20 to 30. They say earnings have a strong correlation with equity markets. While they have cut the estimates for FY23 and 25, they retain the buy on inexpensive valuations. Well, maybe it does well. Who knows? But it's something that you may want to keep at the back of your mind. If indeed HDFC AMC does well, some bit of it could be attributed to bottom fishing in that stock. Some other analyst calls include KNR Constructions, wherein Investec has a buy on that with the target price of 300. Divi's, a new reduce at Incred Equities with a target price of 3438. Lotus, on the other hand, added a new add at Incred with a target price of 626, and Gland Pharma a hold with a target price of 2699. You might also want to watch out for stocks like IOB and central bank. There's a lot of chatter around whether the government will be weighing stake sale in both of these banks. So that is something that people might want to keep in mind. What else? Any other brokerage calls? I'm just trying to figure that out. CLS is a sell on Colgate, by the way, with the target price of 1490, and a sell on Maruti, but don't quite know. By the way, somebody was asking about autos, right? So Jeffries has a note on two-wheeler companies, and their preferred buys are Eicher Motors and TVS, followed by Bajaj Auto. I presume they see that over FY22 to 24, they see the EPS rising about 120% for Eicher Motors and TVS, and about 60-75% for Bajaj Auto and Hero Moto. So that's the call that they are making. Keep that in mind. Lastly, viewers, I was mentioning that if commodity prices are coming off, then you want to be overweight maybe on the commodity users and underweight commodities. But I'm not the man to follow on that. The guy who knows this very well, and we'll do a conversation with him today, Rakesh Arora, is managing partner of Go India Advisors, earlier used to head Macquarie, and is as good a voice as it comes on the commodity space, really. His calls have been fabulous on this space. He was constructive when a lot of other people were not. It played out really well. As I read from his newsletter, he turned negative about 2 or 3 months ago. Since then, the stocks have fallen quite considerably. I think the conversation with him today will be around that after the falls that have happened, what are the pulls and pressures on this space, and why does he believe what he believes? And it'll be interesting to know what he believes as well. So I think if you want to get a lowdown on all things commodities, which is steel stocks, aluminum stocks, what have you, I think it's a conversation that you may not want to miss. So do tune in at 10 a.m. or watch it later on as well. But yeah, I mean, do tune in at 10 a.m. It'll be interesting to see how it works out. So many people are asking for multi-bagger sectors. I don't know about this being a multi-bagger sector or no, but certainly helps to know what a space that so many people are invested in might go through. So that is something you may want to keep in mind. And I promise to the next guest who comes on Talking Point on the equities side, not Rakesh today, but whenever next, we will talk about multi-bagger sectors for sure. Every Thursday at about 8 p.m., we do a Twitter Spaces. To all those guests, I'll also talk about multi-bagger sectors. So maybe you want to tune in at that time as well. Thanks so much for being with us today. This is something that will come out tomorrow as well. And we'll, of course, tell you about this, the Navigating Through Uncertainty series, this time around with Taimur Beg, Chief Economist and MD of DBS Bank. So you might want to tune in for this as well tomorrow. Thanks so much for being with us today on Trade Setup. Have a safe day ahead.